Hi guys, Toby Mathis here, and today we're going to be talking about where to find cash in an emergency. Now, the time to be thinking about this is way ahead of the actual need, and so I'm going to break it down different areas where you can get access to capital from being the cheapest and fastest to being the most expensive. So if I'm just laying this out for you and being the 10,000 foot view, it's always best to have an emergency fund that you can tap into whenever there's an issue. An emergency fund could be as simple as putting money in a savings account, putting in CDs. I typically recommend around 6 months to 18 months of emergency cash where it's earning interest, but it's very, very liquid. Kissing cousin to that is just putting it into an ETF or like the SPY or some sort of maybe a money market that's pretty safe. Something, bonds are pretty safe, but something where in a pinch, you can access that capital within a couple days. So if I sell stock, I'm really 2 days away from the date of sale of actually having access to that capital. So I have to be thinking about that. Other things you can do to have access to capital is establishing lines of credit, and that's getting a loan against something or using it as security. And I'm going to give you a few that you might not know exist. Easy one, and something that a lot of people are used to, is just doing a HELOC. Now, like in Texas, you're going to have a little bit of a bigger issue, right? But you could be using your real estate as security that you don't actually get charged for unless you access. But what's really critical is that you establish that HELOC, a home equity line of credit is what that stands for, before you need that money. Because if you are in a situation where you need the money, you may be in a situation where you're denied access to it. So for example, in 2008, I wish I had a nickel. Every time somebody got themselves in hot water, they had assets. They were real estate rich, but cash poor. Now they needed money, but they couldn't borrow against the real estate because the credit markets tightened. We're going through something very similar now. And so what I say to you is, if you foresee there being any situation where you need access to capital, whether it be an emergency or whether it be for access to capital for another investment, or you need it as you're building out a business or whatever, if you foresee that, do these things now before they're needed so that you're not prevented from accessing or getting access to these types of lines of credit when you need it. Other things you can use as security. A CD can be used as security for a line of credit. Believe it or not, if you have a even account at a bank, you could get a line of credit secured by the CDs that you've purchased with that bank. Now, I'd be careful here when you're dealing with the bank because you have the FDIC insurance up to $250,000. Make sure that you're not buying a whole bunch of CDs if you have more than that and putting yourself in a situation where you may lose it if the bank fails. Another route to go might be to go to a brokerage house, which does not have to worry about the FDIC. They don't use your money as their own asset. It's a custodial account for the most part. And what you use there is you might have some securities, you might have some ETFs, you might have just ETFs on the whole market. You may just have some blue chip stocks, and you could use those as security. It's called a security backed line of credit. It's generally very inexpensive to have access to that capital. They're actually usually significantly cheaper than a mortgage. So if I'm going to be rating these things saying, hey, what's the cheapest to the most expensive, I'm probably starting with the SBLOC, the security backed line of credit, before I'm even looking at my HELOC, believe it or not. And the best time, again, to get your security backed line of credit is before you need it. Now, depending on your institution, you may be able to borrow up to 90% of your holdings. Now, I would never do that unless you were in an extreme emergency, or if you were buying another asset and you're using it as leverage and you're being very honest with yourself about the use of those funds, then maybe, if something's returning you something higher than it's costing you, then maybe you're doing that. It's difficult to do it in this environment, though. So I just say it's better to have that money just sitting there and ready. So it's loans and lines of credit. So if I'm putting these things in order, I'm going cash, I'm going stocks and bonds, I'm going having lines of credit against my real estate, having lines of credit against my my securities, maybe even having some sort of line of credit secured by any other assets. Maybe I have paintings, maybe I have anything else of value. I may want to look at what it would cost, if anything, to attach a line of credit to it. Now, notice what I have not talked about at all is selling your stuff. We want to avoid that if humanly possible, or withdrawing retirement funds or other tax deferred monies because there might be penalties and taxes. So let me just give you an example. Let's say that I have a share of ABC company and it's worth $1,000. And if I sell it, I have to pay tax at 15%. That gives me $850 at the end of the day that I get to use, minus any commissions. Hopefully you didn't have any commissions on it. About $850 that I get to use to spend. I'm going to owe that tax. Versus, let's just say I used that as leverage and I borrowed against that security. Then I didn't pay any tax and I have the entire $1,000 still sitting there, no tax liability, and I could just pay back that loan and I would never have to pay tax on it or anything else. So I like that. Other areas that you may not realize that you have access to use as security, your retirement account. Rather than take monies out of a 401k, for example, fortunately you can't borrow against a IRA. You could roll an IRA into a 401k and then borrow up to 50% of your plan, up to $50,000 paid back over 5 years in quarterly payments. But I could borrow against that if I establish it before I need it. You could potentially even do it after you need it, but it might take a little while depending on what type of plan it is. But if I set it up ahead of time, I'm thinking proactively, hey, I want to make sure that money's there if I need it, then I could borrow against my own retirement funds. I could pay them back, but I could get myself out of an emergency or take advantage of a great opportunity. Whatever the case is, if you have a short-term capital need, you have access to that. What else could I borrow against? Life insurance that has cash value generally allows you to borrow against it. And the beautiful part, again, I know I've said this a couple times, but I'm going to repeat it. When you borrow money, it's not taxable. When I sell something, like even if I canceled my life insurance and I canceled it out, there could be tax consequences to doing so, because under 7702, you were not getting taxed on the growth of the cash value. So the much better route, whether it's securities, whether it's real estate, whether it's artwork, whatever it might be, really, like anything, your life insurance, anything, is to establish the line of credit against it, because I can borrow the money that's secured by the asset tax free. Now we get into the really expensive stuff. The low-lying fruit of the expensive stuff are like cash advances. Maybe I'm paying a one-time 3%, 4% on a credit card, and I might have a year to 18 months to pay it back. I'm actually okay with that. That's actually fairly inexpensive money, right? I could actually do that if I'm playing my cards right. Now, here's something you may not realize. Most businesses, if your credit is good now, remember I keep saying you need to establish these things before you need the money. Don't take a credit hit and then need the money. Set this up so you don't take the credit hit. You get what I'm saying? Is maybe I'm going out and getting a zero interest credit card on a business that's not attached to my personal credit, only in a case of a default. But maybe I establish something that is separate from me that I could advance and take so it does not kill my credit. Again, going back to 2008, we saw this all the time. People would get in hot water. They would access a massive amount of a credit line, let's say in their business, but they didn't establish that credit line in the name of the business. They used their personal credit and put the business name on it. It's actually, they did it in reverse. And as a result, their credit went to poo, because all of a sudden you have problems with like your usage of your credit and starts to drive your score down. And then you see you have no access to other sources of capital, or you may have a capital call on some other loan. Or in the case of the real estate in 2008, quite often you saw the loans go underwater. And in commercial, they would say there'd be a thing called a capital call. So you always want to make sure that you have the credit established before you need it. And to the extent possible, you want to make sure that you have business credit established separately from your personal. So again, going back to 2008, somebody's in personal hot water. They have their house is underwater and they go to do a modification. And what they were being told back then was, hey, just miss a payment and we'll go to loss mitigation and we'll renegotiate your mortgage. We'll modify it. We'll lower the interest rate or extend out the term. So they would do that. And then their credit would lose, their business would lose their line of credit because they're just missed a payment and it affects their business credit because it's actually their personal credit. They never established the actual business credit. We saw that happen over and over again. And unfortunately, the reality for those people is it's too late when it gets to that point. So establish these things ahead of time. And if you're going to do a cash advance against a credit card, make sure it's a low or no interest credit card and that you pay that thing off within that term. But that's not a horrible way to go. The most expensive money is advancing against things that have penalties or using those short-term cash loans. Those short-term capital advances, those dollar loans, they can be up to 400% per annum. There's states that fight it constantly, just trying to outright ban them. But they're living in some context in most jurisdictions where you're doing these daily advance, these cash advance loans. And if you find yourself in that situation, that's the most expensive money. Other most expensive money is draining your retirement account. You get a penalty, you get tax, and then you get what's left over as the money. You think that you're just taking out, hey, I've got $20,000 in my IRA, I'm just going to take it. It doesn't work that way. Your custodian's not going to just hand you that 20,000. They're going to have withholding, and they're going to be there's going to be a big old question mark around it, and they're going to cover their obligation to the federal government before they're thinking of you. So you want to make sure that if you need access to retirement accounts, you roll that puppy over into something that you could borrow against, and then you borrow half of it. If you are in the unlucky situation where that's your only money, you are going to take quite a bit of a hit. Or if you have to sell things like stocks to cover it, you may have to sell something that's highly appreciated. It may come with a tax consequence. Or if you start selling things like, hey, I have to sell my car or I have to sell some other assets, it's generally fire sale when you're trying to turn them into cash. If you are in a situation where you need that money and you're forced to sell, it's just like estate sales. Always expect to take a very sizable haircut on the value of that asset. It's kind of like turning your car into a dealership saying, I want cash. You're much better off doing a private sale under those circumstances. But if you're in a situation where you need that cash right now, you may be stuck going in and getting the dealership value instead. So avoid short-term loans, payday loans, avoid liquidating 401ks, IRAs, cash value, life insurance, any of those things. Now, I will say that there are certain accounts where it's okay to take the money back, and I'll tell you which ones. Roth accounts, Roth IRAs, and Roth 401ks. Your contribution, since you never paid tax on it, you can always take the contribution out without consequence. So if you are somebody that's doing Roth accounts and you're sitting here in a situation where you're saying, I need cash, and you're hearing me say, don't access a retirement account, I'm going to put unless an exclusion for you guys. Because if you are in a situation where you have a dire need and you don't have other sources of funds available, by all means, if you put $10,000 into your Roth account, you can take the $10,000 out without any penalty. Now, the growth on the retirement account is a difference. So if you have a Roth IRA, for example, hasn't been in there for 5 years, you're not over a certain age, it's not qualifying as an emergency or another reason to avoid penalty, you might be looking at a penalty on that, on those funds plus tax. So you want to make sure that you're looking at this saying, these are the funds I put in. And if I want to take those monies back out, so I put $10,000 in over the years, I could take that $10,000 out and I can leave all of the growth in there so I don't get penalties or any tax hits. That's how that works. So I've laid those out. Hopefully you're getting some better ideas of where you have access to cash. The best thing always is to have a cash savings account or a money market account or something that's easy to liquidate and get access to within a day or two, so that you have quick and handy access to cash. but then look at your other assets and know that borrowing against those does not come with a tax consequence. You're not going to get these usurious rates that you get with these payday loans and these other places, especially if you're in a situation where you're desperate. You don't want to put yourself in that scenario where you're having to deal with these folks that will take advantage of you. If you establish these lines of credit ahead of time, then even if there is an emergency, hopefully you'll be able to skate right through it without getting these massive torpedoes that tend to blow people up when those types of situations occur. So this is what we care about, is a little bit of thinking ahead of time will save you a lot of pain later. Good luck to you guys.